Have you ever wondered what it actually looks like to manage over $1 trillion? I mean, really think about that number. Today, we're taking a deep dive into PGM, the global asset management arm of Prudential Financial. We're going to break down its incredible scale, its really interesting structure, and its unique strategy for navigating the market. So let's just start with the headline number, shall we? As of the end of 2023, PGM had $1.38 trillion in assets under management. It's just a massive figure that puts them right up there in the top tier of global finance. But what kind of engine does it take to actually run that much money?
Well, here's a little peek at that engine. You see, it's not just a number on a spreadsheet. It's a real-world global network of over 1,450 investment professionals spread across 41 offices all around the world. That's what it takes to manage $1.38 trillion.
Okay, so here's our game plan for this explainer. We'll start by figuring out who this trillion-dollar player is investing for. Then we'll peek inside their investment engine. After that, we'll get into their unique tale of two pillars for sustainable investing and see how it all boils down to client choice. And finally, we'll put it all together to see how they mix that huge scale with customization.
All right, let's tackle a really basic question first. When you're managing that much money, whose money is it anyway?
So the client base really breaks down into three main buckets. The biggest piece of the pie, at $620 billion, is what they call third-party institutional money. Think pension funds, big endowments. Then you've got $384 billion from their parent company, Prudential, and another $317 billion from retail investors like you and me. The big takeaway here? Institutional clients are absolutely their bread and butter.
So how in the world do you organize an operation to invest almost $1.4 trillion? Well, the answer isn't some single giant approach. It's actually a pretty specialized multi-part engine.
Now, if you look at where they put the money, one thing just jumps right out at you: the absolute dominance of public fixed income. We're talking $832 billion. That is the core of their entire portfolio. Yeah, they're in equities, real estate, and private credit, but it's crystal clear that their foundation is built on fixed income. And they don't just throw one giant team at all these different assets. No. Instead, PGIM works more like a collection of specialized boutiques. There's a dedicated group for fixed income, a different one for real estate, and so on. Each one is a laser-focused expert in its own area, which allows for some seriously deep specialization. And just look at the scale of these groups. The fixed income team alone is managing $837 billion. Jennison Associates handles $211 billion in active equity, and PGIM Real Estate is running $206 billion. This multi-manager structure is really the secret sauce to how they can have such deep expertise at such a massive scale.
All right, now we get to the real heart of PGIM's modern philosophy, especially when it comes to a topic that can be pretty polarizing: ESG, or environmental, social, and governance investing. They frame their entire approach around what they call a tale of two pillars.
So the very first pillar is something called ESG integration, and the two most important words there are economically material. This isn't about promoting certain values, it's about protecting value. For instance, it's about thinking, what's the risk of water scarcity for this beverage company? It's a totally pragmatic risk management tool. So think of it this way: Pillar 1, that ESG integration piece, that's the default setting. It's their standard risk management. Pillar 2, on the other hand, is completely optional. It's the custom order for clients who specifically want to invest based on their values or to achieve a certain real-world impact.
And that distinction brings us to our next section, which is really key to understanding how they operate. For PGIM, these deeper, sustainable investing strategies are not a default setting at all. It's an explicit choice made by the client.
And you don't have to take my word for it. Their own report makes it crystal clear. Additional ESG capabilities are applied when explicitly requested by the client. This puts the control for any value-based investing squarely in the client's court, not the asset managers. So how widespread is that first pillar, the one that's just about managing risk? The answer is 89%. That means for nearly 90% of all their assets, those economically material ESG factors are being considered as part of the standard process. That risk analysis is happening across a huge chunk of their portfolio.
But, and this is a really crucial point, for that 89% of assets, ESG is just one piece of the puzzle. An analyst might look at a company's labor practices right next to its balance sheet and its market share. The ESG factor might get outweighed by other financial stuff. It is never the sole deciding factor.
And this quote pretty much says it all. This is their official stance. They are not focused on ESG/sustainability above any other investment consideration. For them, the number one job is generating the best risk-adjusted returns. This two-pillar system is simply how they do that, while also giving clients the option to go further if they want to.
So, after all that, what's the big picture here? Well, PGIM's model is this really fascinating blend of massive global scale and a deeply customized client-first approach.
Let's break it down into 4 simple steps. First, you've got the mind-boggling scale, over $1.38 trillion. Second, you have that specialized structure, letting experts be experts. Third, there's a baseline layer of risk analysis that includes those material ESG factors. And fourth, the ultimate choice for any deeper ESG goals is left entirely up to the client. It's an opt-in service, not a mandate.
You know, when you think about it, PGIM's model makes a pretty powerful statement. By separating their own risk management from optional, client-led values, they really put the power of choice front and center. And it leaves us with a pretty interesting question. For an investor managing this much of the world's capital, is providing that ultimate choice the ultimate form of responsibility?